Well, hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Tuesday, September 8th, 2020, and we've got a lot of news in the headlines today, so let's get right down to our daily updates. Thanks for watching. Well, here we go. We're Tuesday morning, off to the races, if you will. Long extended weekend, extended sell-off from, if you remember, we had the start of the sell-off last Thursday, Friday, continued a little bit before. We caught a little bit right before the close, which is a positive sign. And then this is the third day of an extended sort of 3-day breather, if you will. Is it a correction? Is it something more than that? Or is it a healthy correction? And by that we mean a pullback of those that have just hit most recent highs. Keep in mind, technology has been on a tear. So for technology to take a breather, year to date, it's been incredible. It's been leading. But to take a 5 to 10, we're about a 10%, if you look at the NASDAQ specifically, about a 10% pullback. Obviously, some of the larger big tech names are even have discounted and pulled back even further than 10%, about 15%. But all in all, if we want to look at the underlying sort of technical charts, we want to look at the moving averages. And moving averages, the S&P and the NASDAQ is right around the 50-day moving average. So if we close below it, that means we have further selling. If we hit that moving average and then rebound and sort of close somewhere just off of that low, and maybe retest it later this week. That's sort of a healthy correction as we're muddling through right now, early September. Now, volatility historically has been months of September and October, so this is not uncommon or even out of the question right now. And then add this to the additional headlines that we got. China and U.S. relations are back into the headlines, a news cycle, if you will. Obviously, it's a political season. And President Trump is now thinking about more bans on cotton and a few other tariffs that he's thinking about doing, as well as Chinese companies at large. And so that's taking a wear on markets itself because it's just, again, political instability and uncertainty. Markets don't like that. And then finally, we have small businesses trying to rebound. The last week read of Small Business Association, we got a big bounce in terms of confidence, which was a positive, net positive. But right now we're going to see this play out as coronavirus, has really crippled the small businesses of America. And we need sort of the HEROES Act or the CARE 2.0 Act. Senate comes back this week in session, and then next week, I believe, the House comes back in session. So we could be about a 2-week away, even though Pelosi and Steve Mnuchin, Treasury Secretary, were still in rounds of discussion. The Senate Republicans want a sort of a modified version of $500 billion. They'll go up to $1.2 trillion is the rumor. And the House Democrats want about a $3 to $4 trillion package for additional stimulus. Again, the markets are anticipating that a deal will get done. I'm personally skeptical, but we'll see. That being said, the size of the deal is really the negotiating and what's in it, and that's where Washington comes together. So we're going to watch that. Keep an eye on the U.S.-China relations. That rhetoric is going to continue. It's going to get higher and more sort of contentious, if you will, because I think there's some political parties that want to sort of create the narrative and control the narrative in the news cycle that we watch. But markets are actually really paying attention to ultimately the moving averages on this correctional rotation that we're seeing right now in the market. So that's our update for Tuesday. Thanks for watching, and we'll catch you again next time. Take care.